Limited FY20 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Thank you, and over to you, sir.
It's our absolute pleasure to host Godrej Consumers for Q4FY20 and fiscal 2020 conference call. The company is represented by Ms. Nisaba Godrej, Executive Chairperson, Mr. Vivek Gambhir, MD and CEO, Mr. V. Srinivasan, CFO and Company Secretary, and Mr. Samir Shah, Head of Finance, India and SAARC and Investor Relations. At ISEC, we are long-term believers of the Godrej consumer story for a very long period of time. We continue to recommend the Godrej consumer story, the stock, to investors with an outperformance thesis. Now over to Mr. Pradeep Bantara for further the call.
Thanks for joining us today to discuss the quarterly performance and the current business environment. We will have Vivek share his thoughts on our performance, and then we can open up for Q&A. Over to you, Vivek.
Thank you very much, Manoj, and thank you, Prateek. It's a pleasure to speak to all of you. Good evening. Hope all of you are safe and healthy. What I'll try and do is spend a few minutes just talking about the overall performance and then turn it over to Q&A. I think whichever way you look at it, it has been a weak performance overall in Q4. The details are there in the presentation that has been shared. So rather than review what has already happened, we want to spend more time on discussing how we are preparing to deal with the evolving situation and share our perspectives on why we believe we are well positioned to emerge stronger. As we all know, this quarter was an unprecedented period due to the spread of the COVID-19 epidemic across the globe, impacting all the geographies of our operations. At GCPL, we worked on a safety-first principle, ensuring that our employees and business partners are safe and taking all the necessary precautions to control the spread of COVID-19. The Godrej Group, in solidarity with people and government efforts, earmarked an initial outlay of INR 50 crores for community support and relief initiatives in India. We ensured adherence to the lockdown and in parallel worked with government authorities to revive supply chain operations for essential items. During this quarter, we witnessed steady demand in our categories till mid-March 2020. Until that time, the teams were actually quite optimistic and hopeful of a decent quarter. However, the spread of the virus and the eventual lockdown in many geographies of our operations resulted in virtually no sales in the later part of March 2020, significantly impacting our sales performance in the quarter. This resulted in a weak performance in our India and GAUM businesses, which got impacted the most due to the lockdown. In India, the impact was substantial as we typically have very high sales in the last 2 weeks of March, since it is the onset of the summer season for soaps. For HI as well, we also saw a significant adverse impact on sales in the later part of March 2020, which marks the onset of high mosquito infestation in North India. In our international businesses, Indonesia, which did not see a full lockdown, continued its growth momentum with mid-single-digit profitable constant currency growth in spite of the COVID-19 crisis, driven by consistent performance across categories and several go-to-market initiatives. In GAUM, Godrej Africa, US and Middle East, we witnessed a weak performance amidst disruptions caused by COVID-19 in all our countries of operation. During this unprecedented quarter, what is encouraging is that we gained share across most categories. In fact, we gained share in almost 70% of our portfolio. What we are doing now is approaching the situation through three lenses: restart, recover, and retool our business. So as part of restarting, we are safeguarding lives and livelihoods We are starting operations wherever possible, getting the necessary clearances and permissions. We're also supporting our partners a lot. We're one of the first FMCG companies to provide a COVID insurance scheme to our entire extended team, additional allowances, safety kits, documentation to our vendors so that they can operate as essential good manufacturers, giving advance payments to a few vendors who supply critical materials, etc. So supporting our partners for this was extremely important. At the same time, we have been doing what we are calling smart cost management with a closer look at pruning our overheads. And we have been supporting our communities, as I mentioned to you. We know that this is a health and humanitarian crisis, and we are, with people working from homes, we're stepping up connect and engagement with a lot of care and compassion and communication with our teams. The second part of our approach has been the recover or the bounce back phase, where as markets are opening up, as lockdowns are easing, we are ramping up operations in both production and distribution. We are also looking at third parties to augment production. We are trying to make it easier for our GT partners to order through retail ordering processes enabled remotely, through web-enabled ordering applications. We are partnering with other companies such as Uran, Swiggy, Zomato, Shop Kirana, Zoomcar, etc. The idea is to keep on ramping our operations. What is important right now is improving availability. And so we are working very hard to ensure that our products are now getting more and more available. This is also a good opportunity to drive market share. As I mentioned to you, in spite of a tough environment, our market shares have been increasing, and we do believe there are opportunities to further drive market share. We are also fast-tracking priority innovation. I think you will see a lot more innovations that will be launched by us over the next few weeks. The channel dynamics are quite different right now. So there are different channels first that we are employing, with each channel requiring a different playbook, whether it's the Kirana stores, modern trade, e-commerce, chemists. So a very differentiated approach is being employed at the channel level. And then we're planning for different scenarios to prepare for life post-lockdown. As part of the retool phase, we recognize that we need to prepare for a new normal. So we are understanding and analyzing new consumer needs and behavior, understanding channel shifts, looking at a much more flexible and adaptive supply chain, trying to forge a much more agile culture, and also embracing digitization in a very big way. The idea is to be able to use this turbulence and this volatility to create more opportunities and definitely emerge stronger. So there are three big areas of focus for us. One is around getting back growth, because we recognize growth has been a challenge for us. The second is to relentlessly execute. And then the third is to sustain a very high performance and winning culture. So as part of getting back growth, we're looking at sustaining and improving our market share in our key core categories. We're also accelerating some of our new categories, and we'll talk a little bit more about that to build additional growth vectors. The focus on innovation has worked well for us. We're going to dial down more on disruptive innovations. And we do see, given the channel shifts, some very important opportunities to transfer our route to market and go-to-market model. In terms of relentlessly executing, we do have a very unique multi-local model for us, which has worked in the past for us. The need is to drive much more agility and entrepreneurialism on the ground. We also want to tighten cost controls and preserve our strong capital structure. The idea is to engage in smart cost management. We want to take a balanced view, where we want to be prudent, invest in the right areas, but also cut overheads. The third is around supply chain, flexibility and resilience, where we are focusing a lot on automation, visibility, and planning. The final area of focus for us is to sustain a high performance and winning culture, where the most important part for us is to live the Godrej way, which is our values and purpose. We recognize that the work to home, there'll be new ways of working that will emerge, so we'll accelerate that. And finally, this is a great time to build new capabilities such as digital, e-commerce, and analytics. The situation will remain challenging. There is no way to accurately predict the coming year. So we will have to plan for different scenarios, be adaptive, and resilient. However, we believe that we're relatively well positioned and have several strengths that will hold us in good stead during this time. First of all, it is our portfolio. A substantial portion of our portfolio in India and Indonesia in particular consists of essentials or basic value for money products. Even within our Africa business, the portfolio is skewed towards value products. During this time, we do expect a flight to value, given potential job losses and incomes coming down. Our value portfolio should provide significant advantages. And in over 80% of our portfolio, we have a top 3 position. The experience from past downturns indicates that once a downturn is over, the gap between leaders and followers widens. So we do intend to capitalize on this downturn to be able to emerge stronger. The second reason is that we believe this is an opportune time to drive a resurgence in HI. This is something that we have been working on for the last 12 to 18 months. During the COVID crisis, there will be a larger focus and awareness on disease prevention in general as consumers look towards protecting themselves more from all diseases. We have a great opportunity to play and win the full HI portfolio in the burning, electrics, personal, naturals, and non-mosquito portfolio. We have in our arsenal now the strongest ever portfolio in HI. This is also a good time to intensify our pushback on illegal incense sticks, as a lot of those players are going to be in trouble. So we definitely believe that this is the year for a resurgence in HI. The third very important aspect is the plans we have defined for the hygiene category. This is an area that fits in very well with the Godrej company ethos. It's all about trust, good quality, and affordability. Increasingly, consumers will give a lot more thought to cleanliness and purity. This will be true for your home, objects, and surfaces, but equally so for your body. The health and well-being trend will continue to accelerate. And we have moved very quickly over the last month. Hygiene products have been launched in India, Indonesia, Bangladesh, Sri Lanka, Kenya, South Africa, USA, Argentina, and Chile. And there has been a range of different products. This week, for instance, we are launching a Health Plus soap in India and reusable masks. More product launches are expected over the next 45 days. We recognize that a lot of players will be pursuing opportunities in hygiene. So we are planning for some very disruptive products as we've done in other categories. In fact, we are targeting for almost 5% of our revenue in Q1 to come from hygiene. The fourth and final reason is that we are very well positioned and we're determined to not waste this crisis. We recognize that our performance had been below expectations even prior to the COVID outbreak. COVID just exacerbated it. And we had begun putting corrective actions in place even before COVID. And several of our leading metrics, such as improvement in market shares and the initial feedback from our launches, gives us a lot of comfort that the business has been turning the corner. We have the humility to recognize that we've performed below our expectations and have diagnosed what went wrong. And we have the conviction, the commitment, and the ability to get back to delivering market-leading returns. There is a huge fighting spirit in the organization, and the team is charged up to prove that we can do much better. We are seeing daily examples of extraordinary agility, tremendous collaboration, and great creativity in the organization. We recognize that a long-drawn battle lies ahead, but we are fully gearing up and believe that we are well positioned to win. So one final word before we turn to Q&A. In April, we had positive growth in India, and the momentum in growth continued in Indonesia as well. GOM saw degrowth, but the performance was above our initial forecast. So while it's early days, the momentum in April is encouraging, and we are hoping to continue to build on this in the months and quarters ahead. I'll now take a pause, and we will be happy to take your feedback and answer your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Percy Pantaki from IIFL Securities. Please go ahead.
Hi, good evening, team. My first question is on basically the path forward for recovery. Obviously, March quarter, there is a reason for the poor numbers was mainly the supply chain disruptions. We wouldn't have seen any COVID-related demand impact in March, obviously. But going ahead, we will see a mixture of supply and demand effects. So my question is, even if we assume that supply bottlenecks are resolved completely, how much would you say would be the demand tapering and, versus your earlier guidance, or not guidance, but earlier sort of conversations that you've had with the investor community? How much would you say would be the tapering down due to the demand impact of COVID?
Percy, I think at this stage it's quite difficult to have a very accurate picture of what the demand scenario would look like because there are so many unknown variables right now. One is, how long do the lockdowns continue for? How big is the stimulus package? Are there, resurgence of COVID in certain parts of India? So I think till we get a better picture of what the overall implication as far as, consumer incomes and job losses is concerned, the demand picture is a little bit difficult to have a clear sense of. Having said that, though, I think in the categories that we are in, particularly in a category like HI, as I was mentioning, the entire focus on, disease prevention should lead to growth in HI. Similarly, in soaps and hygiene, we should start seeing growth. And even in discretionary categories like hair colors, we've been able to now start seeing initial demand. Both in hair color and air fresheners, we've done some consumer research, and those are now coming up as categories where consumers are now looking to be able to go and buy in the market. Nisa, would you want to add there?
Yeah, I think, Percy, thank you for your question. Right now, as far as we're seeing on April and even May to date, there is quite decent, good growth ahead of what we were sort of expecting in both India and Indonesia. And I think the way we're really thinking, again, I don't think we can have exact answers, but what is our portfolio, correct? And if you look at our portfolio, about 70% is this sort of essentials, very sort of high value for money. I mean, if I call out something like Mr. Magic hand wash, which is, at 20 cents or 15 rupees powder to liquid hand wash, these are, products that we already have that are in extremely, extremely high demand. We're also seeing a resurgence in HI from a health point of view. People don't want to land up in the hospital for malaria and dengue at this time. That's 30% of GCPL's portfolio, correct? 20% of I'm talking about our global portfolio, is soap. So I think one is, I'm looking at it in terms of that we have a portfolio where the consumer demand is fully there, correct? We're also pivoting both in HI, in soaps, and, we're thinking of a hygiene very aggressively. So obviously every company in the world has launched sanitizer right now, but we're seeing consumer habits change very rapidly. And, we've already launched a slew of products and we see more coming. And to these products, we won't just bring Me Too, but we will bring our value for money, disruptive innovation. So I think from a portfolio point of view, we find the demand quite strong, at least for the 70% of the portfolio.
Yeah, I think just to add to that, Percy, one of the trends perhaps which will get played out over a period of time is search for, value for money offerings, right? I mean, or if you want to call it down trading, but I think value for money offerings, from consumer side, we think our portfolio is quite well, poised across clusters or across, key countries where we, claim to meet that, kind of need from consumers. To kind of also eventually service, the demand. So that's the other thing to kind of just keep a note of.
Right. Second question is on Indonesia. Till now, we have not seen any effect of COVID in terms of business and sales. But I mean, on the ground, you have a presence, so you would have a better idea. What is the situation there? Is it sort of improving or is it deteriorating? And therefore, do you think there will be some sort of lockdown or something of that sort there also? Any thoughts that you might have since you have a presence on the ground there?
Sure. So, Percy, I think our view is, again, obviously we cannot tell 100% what will happen. You know, we've seen countries recycle through this. I mean, Singapore being an example. But it seems Indonesia has taken a very good point of view on its context of who it is as a country and how it must handle it. You know, it's not gone and copied the West sort of blindly. And, you know, there is a lot of social distancing going on. So your malls are closed, your schools are closed, but they've actually let the economy sort of run. They've stopped people from going home for the Ramadan holidays and stuff, so it's been quite strict that way. But they've made sure that the economy is running, and we hope that they continue to do that.
Right.
I think Percy, the watch out there in Indonesia is, as Lisa was saying, is that, you know, they've enforced large-scale social distancing rather than shutdowns. I think the watch out there is that, you know, there are obviously some concerns about COVID spreading to some of the smaller cities. And I think, which is why Modik, which is the exodus around Lebaran, has been, where almost 20 million people go back to their homes, has been banned now. So I think we'll have to wait and watch. But so far, I think, they've managed to, I think, not fully shut down the country, but enforce large-scale social distancing.
Right. Lastly, on Africa cluster, basically, you're into hair care there. Now, I know it's a very ingrained habit to use hair extensions, etc. But do you think because of whatever economic disruptions, loss of income, etc., there could be an impact in that category, which is more long-lasting? When I say long-lasting, 3 to 4 quarters. Not that people stop using extensions, but instead of, let's say, changing it every 4 weeks, they change it every 5 or 6 weeks. That also would have a material impact on your sales. So any thoughts on that?
Yeah, I think, Percy, I think one of the big things that will happen is downtrading. And the biggest part of our portfolios is braids there, which is sort of the most value for money. But we definitely see some impact happening there because the salons and all are closed. But, you know, we have a good do-it-yourself portfolio also, which you can do by yourself at home. So we are sort of pivoting on some of those fronts. Also, I think because we have the full portfolio of products between dry and wet at these value price points, you do have to take care of your hair in some sort of way. So I think we're just going to have to be really agile in terms of depending on what consumer demand is, you know, putting the right products in front of them. We're also making sure that at this time we're also looking at you know, increasing distribution into the smaller retail stores that, you know, are closer to consumers' house. There's also, you know, you might have seen the building society effect in India when our building societies are coming together to buy products. Those consumer buying groups have existed for a long time in Africa, so doing more work there. But I would definitely say, you know, I wouldn't say that portfolio is as strong as our HI or you know, soaps portfolio at this time. I just wanted to make another comment. In Africa, we also have products that used to be, you know, were coming in from Chinese imports. We see those sales channels quite impacted. So there's also that opportunity to get market share. And we are the sort of biggest player in Africa, so we also see the market share opportunity. So I think one is obviously your portfolio opportunity, but where will you gain market share? So we see some of those opportunities also.
And just to add, Percy, a lot of African countries are still in lockdown. and in different phases of lockdown, right? So there is a lag actually in many of these African countries compared to what we are seeing, say, in India at this point in time. So to that extent, we do expect, performance to be soft in very, very, sort of near term, but definitely a big opportunity in terms of gaining market share from a lot of, kind of cheap importers. And also, as Nisa was sharing earlier, we are also scaling up our hygiene portfolio in multiple countries in Africa. So that also should be a big growth vector during the course of the year.
Yeah, and I don't know, we also have new leadership in Africa. We have someone called Godrej, who's just taken over in April. And, he was he he's South African, 30 years of experience on the continent. His last role in Africa was CEO of Nestle's Nigeria business, which in Nestle is like what HUL is in India. So I think having someone who's very experienced with the continent, we feel will give us advantage at this time.
Right. That's all from me. Thanks and all the best.
Thank you. Stay safe.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on the two data points that you mentioned. That 70% of the portfolio, there's a gain in market share. Similarly, 70% of the portfolio is either essential or it's value for money. So my question is on the balance, 30% in both these segments. So if you could define what is non-essential / not value for money, which products, and similarly, which are the segments of products which have lost market share.
So, Abneesh, we would shy away at this point in time from sharing very micro details, country by country and category by category. But definitely, even within, just for example, and better understanding, category like, hair colors, which is, kind of very close to discretionary, or at least sounds, very close to discretionary, there are, formats and those price points which, do qualify in, value for money, sort of offering. Even in category like, say, hair extensions in multiple countries in Africa, braids is something which is very much at, bottom of the pyramid. And we are seeing that, in fact, for example, in markets like Kenya, which are relatively open as compared to some of the other, African markets. So that's the way we have, kind of called out this essentials, plus, kind of VFM space. So it's a cut not actually only across categories, but even within categories, formats and price points, and things like that.
Right. My second question is to Vivek. Vivek, you mentioned pre-COVID also there were some issues. So if I see the data point, Godrej consumer in the first 3 quarters was in the higher tier, in the top tier in terms of volume growth in India. This quarter, if you see, even hair oil companies have seen a better growth than your overall growth in India. So if you could elaborate, what is the reason, pre-COVID, what was the issue? And surprisingly, in April, when almost every FMCG company has seen below par factory utilization, you seem to have grown. You said you have grown. So could you explain both the bits?
Yeah, I think, Avnish, if you were to look at our performance till February, our year-to-date volume growth was about 5% or so. And if I look at the plans that the team had put into place, say in India, I think we would have likely ended the year at about a 5% volume growth, which would have been good in these circumstances. So what ended up happening was in the last couple of weeks of March, we probably lost about 250 crores of sale in India. And that's really what ended up dampening our performance, which from a volume growth perspective, at least was looking quite healthy till then.
Yeah, I think just to add also, Abneesh, we have shared this in our performance update that we did see a secondary sales decline of around 10-11%. I think one of the other reasons also for decline in reported primary numbers was that we were walking into the season for, category like soap as well as for household insecticides in North. So after chaos of around 2 to 3 weeks on supply chain front end as well as back end, we more than got our acts, back in place to sort of ensure that, we are able to at least partially, if not fully, kind of get into the season for key categories like soaps as well as household insecticide category in North. And that's the reason why, April is a growth for us.
No, but April factories were not nowhere near even 60-70% capacity utilization for most the first 20 days. And second, pre-COVID, I still don't understand. You had made an opening statement wherein you said pre-COVID also the growth was slower. So that I still didn't get.
So just on the latter part first, Abneesh, it's not just factories but also the stocks which were lying in, kind of plant warehouses and regional warehouses and carrying and forwarding agents, which was completely at standstill for a period of 2 to 3 weeks. So a lot of those stocks have also sort of gone out eventually in the hands of consumers. And once the factory started its operations gradually, which I think started in a way from first or second week of April, and has beefed up with every passing day, we were able to produce in the back end as well as sort of fill in kind of channel partners inventories and eventually get the products in the hands of end consumers. Just to quantify this, as of today, we would be close to around 70-75% of kind of capacity utilization across our factories in India.
And Abneesh, my comment around pre-COVID was a reflection of the last couple of quarters, right, where our volume growth have been very strong, but we recognize that our value growth has been below some of our expectations.
But is there a deterioration in the soaps? You are gaining market share for 3 quarters of this year. And when I see the number one player which reported just a 7% overall, they don't give obviously soaps separately. Is there any deterioration there and now are you coming back? Some color, I know these are very sensitive things, but some color if you can give, that will be useful.
Well, Abneesh, I think we can share what we have shared actually in a performance update, which is we have gained shares, in soaps, not just in last quarter, but consistently over last couple of years with our initiatives and micro-marketing initiatives, which has been one of the key, pivot for us in driving growth in soap category. We remain very confident of share gains even going ahead. And something like this health soap, which, Vivek was just talking earlier, will definitely give a boost into the overall soaps performance, hopefully.
One follow-on question on Indian business hygiene. You said there is the next HI. So what does it mean? Second is hygiene is 5%. I think you mentioned in Q1 likely. So what products come in hygiene? Obviously soaps is not there. Now if you see, you yourself said that almost every company is entering there. We have seen liquor company enter, paint company enter. So currently it's dominated by one unlisted player, and then we have got Hindustan Unilever also very aggressive. So who will win here out of the new players apart from the top two?
So your guess is as good as anyone. But I think the way we're seeing it, definitely everyone launched a sanitizer. And right now, I think it's much more a supply side issue than a demand issue because the demand seems pretty much limitless. But I think we are looking, I don't think COVID is here and then gone in 2 months. And we feel like, something like hand wash, which is supposed to do for every disease, will have finally been built forever. So I think what we're looking at is both on the personal care and the home care front. What are the products that consumers need to keep clean? Correct? Some of these we're already extremely good at, which is wipes, because we have one of the lowest cost manufacturing models in Indonesia. The other things is things like spray, disinfectant, aerosols. We have a very big aerosol business, so we have big cost advantages there. So I think in hygiene, we're looking, we just, like Vivek said, we've launched Mark. So we're looking at, close to, and it's a big portfolio. And I think we're thinking, something like hand wash also we're calling out in our hygiene portfolio. So like I said, having a value for money product like Mr. Magic at 15 rupees, this is the year for these products. So we see this really, and I think we know how to do these health products. We definitely, you have Dettol, you have Lifebuoy, they're the really sort of big boys in these categories already. But especially in India, Godrej, our brand name, our distribution, So we do feel that more than other players, we will have that opportunity if we're agile and we innovate and distribute well. So we're quite excited about the opportunity, but we do realize that, there are a number of people who are equally excited. We're just going to be focused on serving the consumer well during this time.
And last question on Africa. So Africa this quarter also much slower than Indonesia. So what will be the brief for the Nestle Nigeria head who has joined? Why I'm asking this is Africa saw COVID much later than even India, and we know the severe lockdown is not really there, at least in Q4. So what is required to be done here? We have seen the Chinese imports, etc., but still we are not seeing consistent good numbers like in Indonesia. We are not seeing that.
So I think he's just come on. So I think there are two things here that, the ask is from him. One is to obviously step back and fundamentally look at the business and, say where are our basics, good or bad, in terms of priorities, in terms of portfolio, where do we sort of push on and stuff. So that's slightly longer term work. I think the other work is the here and now, because we're still running a month to month, quarter to quarter business. And I think some of the things he's very quickly focused on. One is GTM, correct? He had many sales roles on the African continent. So he is using his thinking, his contacts to just push that right now as hard as possible. And don't forget, even in Africa, things like this hygiene portfolio and stuff becomes pretty important. So these numbers of this 5-6% we're talking about, we've also launched products in the US and in other countries on the continent. So I think there is, I don't think our portfolio in Africa is as resilient as our India and Indonesia portfolio, but there are still opportunities there. So he has two tasks. One is the short term and obviously the longer term piece.
Yeah. And I think, Avnish, to build on what Nisa was saying, along with, go-to markets, I think his second big mandate will be complexity reduction. I think there are going to be lots of opportunities for simplification, looking at our manufacturing footprint and trying to see how we can optimize it further. Because I think the margins in that business are below what we would like to. So definitely there will be a stronger focus on margin improvement there.
Okay. That's all. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Hi, thanks for the opportunity. My first question was on the resurgence of HI that you talked about, and just stepping away a little bit from COVID. The launch of Gold Flash, we are not seeing it for few quarters, at least in South India. How are you feeling now about the acceptance of the product? How's the consumer feedback now? What's the status on the national distribution reach? And you've talked about flight to value. So should we expect more launches in the affordable categories here?
So let me answer on Gold Flash. I think Gold Flash, I think in terms of our distribution norms, in terms of our consumer sort of acceptance norms and stuff have been very good. We first launched in the South and then we moved the launch sort of nationally. We're very pleased that actually our HI portfolio right now, from whether it's price points, whether it's consumer job to be done, I mean, in burning format, we have intense stick, we have fast card, 1 rupee sort of, price point products. Our coils have been doing extremely well. We have this new LV, which is highly efficacious that we put in. We've launched a new Goodnight fully natural range. So we feel very confident that our portfolio is full. We also feel that this is really the year to play our advantage as this, very large sort of market share leader, and we have been gaining market share in HI, whether it's against illegal incense sticks or the other players. And, look, we're coming off the back foot, so we do realize that we're on this call not having performed up to the mark. But I think this is we're just using it to say like this is an opportunity because there is really strong demand for these products, and we have to give it our all. And to give it our all is also just to serve, make sure we're serving our consumers. Your second question was, sorry, Latika, what was the second question?
It was more to do with, do we expect more launches in affordable categories? And if I may just add to your comments, you did say that, April, May, year to date, you've seen growth. I believe this is more about, your sales from your, your basically channels are stocking up. But any color on specific to HI at the retail end, particularly North India, where this, mosquito infestation season was about to start, how the initial feedback has been, if any concrete color that you have?
It's been very strong. It's been very strong. Right? People are spending more time at home, and no one wants to take a chance on their health. We're also pivoting a lot of our advertising and communication also to talk, to focus more on the health issues right now. So maybe you want to add something?
Yeah, just to add to that, Latika, I think the secondary growth, especially for HI, has been very close to the primary growth. So that answers your question of, the reported sales growth, whether just filling in, the channel pipeline. I think the other reference over here is also what we are seeing in Indonesia, and actually seeing over last, kind of 6 to 7 weeks. I mean, there is significant higher consumption demand for household insecticide products in Indonesia because of its, disease prevention, sort of platform or, association, because consumers do not want to sort of, take a chance of getting infected by malaria, dengue, and having to sort of visit, hospitals where there is a high possibility of, any other infection. So definitely, we are seeing that, trend in Indonesia. We want to definitely take up that positioning of, kind of disease prevention in otherwise also an environment which is very, cautious on health and hygiene at this point in time in India, and sort of, scale up the overall, growth over a period of time in India. So that's the thought process, actually.
Latika, if you see something like, say, the roach business, which is still a small percentage of our business, I think the focus that, cockroaches cause respiratory diseases and asthma and all, actually, I think all that just becomes very, very heightened in this environment. Correct? We're in a very heightened demand for protection and safety, not just against COVID, but other diseases, because you don't want to risk your family members at this time.
This is helpful. And just the second aspect I wanted to, get some thoughts was, distribution channels. You definitely talked about some comments there. But just we're hearing or picking up from a lot of companies that it seems, semi-urban, rural has been relatively less affected. It seems a lot of government initiatives are also, going to be aligned towards that segment. In your view, should we expect a more accelerated push towards expanding rural reach, and that will be coupled with probably more, value for money products also being launched in your portfolio? Any initial thoughts there?
Latika, I don't think it will be a question of either or. I think what will require in a situation like this is a far higher level of dynamism, because what you'll find over the next 12 months is lock-ins and lockouts and lockdowns are going to be a fact of life, right? The key will be is what we call micro cracks. Can you actually find small opportunities? Some of them will be in urban, some of them will be in rural. They'll spread across Kirana channels, I think online, across chemists, across rural. So the playbook gets far more micro and far more nuanced. The good news is we have put the technology backbone to be able to actually go down to the micro level, to be able to try and see where the demand pockets are. We have a project called GTM 3.0, which we had kick-started a few months ago. A lot of those pilots are being run. I think rural will be a very important part of our strategy. As Nisa was saying, affordable flight to value will again be part of it. But we do see opportunities in urban as well. We just don't know in what parts of India the opportunities will come, again, depending on, what it takes to actually control the pandemic.
And I think, Latika, you had a question on the sort of value for money new products. But, just quickly, if you go through our portfolio, like I was saying, in HI, you have fast card at 1 rupee. You have your incense sticks at that sort of price point. You have your coils. Hair color, we have a 10 rupee sort of herbal powder. We have our shampoo hair color, which has been doing amazingly well. Expert creme, which we had done a relaunch with, has hit its highest ever market shares, 30 rupees sort of product. The relaunch has gone very successfully. And then obviously, our big brands like Number One and stuff are sort of value players. So I think that's what Samir was trying to say sort of earlier, is one is the portfolio we play in, and then where in that portfolio do we sort of play? And then if you think even something like Air, correct? If you look at actually something like Air Pocket, which is the biggest sort of bathroom freshener, actually has germ protection properties. We've actually gone and put that on front of pack in sort of our air sprays. We're doubling them up. We've looked at some of the formulations and making them sort of freshener plus sprays. So we're doing a lot of that, but we do actually feel that we play in categories and already have the value for money price points. I think where you see a lot of the innovation happening, and that will be across price points, is on hygiene. And again, I keep mentioning Mr. Magic at 15 rupees. You'll all have to count how many times I've said it on the call, but I'll try and not do it again.
Sure. Thank you so much for the detailed reply. All the best.
Thanks, Radhika.
Thank you. The next question is from the line of Aditya Soman from Goldman Sachs. Please go ahead.
Hi, good evening. Two questions from my end. So firstly, we see a very sharp reduction in the ad spend and employee costs, and the employee costs in particular were quite surprising. Any perspective on why we've seen such a sharp reduction in both QOQ and YY?
Yeah, Suman, hi, this is Samir here. So I think the reason for drop in employee cost is because of the performance-linked variable remuneration, which in turn is driven by delta EVA. A good surrogate for delta EVA could be the EBITDA in absolute terms, which we have had in Q4 of FY20 versus Q4 of FY19. So the entire drop in manpower cost is completely driven by the lower performance-linked variable remuneration driven by the delta EVA. I think in terms of advertisement spends, yeah, I mean, if you look at on a YY basis, we did see, a drop, but there is also a little bit of phasing, right? We had most of our launches during the course of the year, whether it was Gold Flash in South or shampoo hair color or even creme, kind of pre-launch. So to that extent, in Q4, there were not many launches as such, and hence heavy marketing investment. And some part of marketing investment in very late March were also sort of held back just because of the uncertainty surrounding COVID-19.
Understand. So just following up on the employee cost question, so is this just a function of basically the fourth quarter seeing the entire variable comp, and which is why that is lower, or is this just the comp for the fourth quarter that was cut?
Absolutely.
All right. Thanks. And second question, just in terms of your gross margins or input costs, we saw that the sort of reduction in input costs was much lower than or was flattish compared with sort of a significant reduction in your top line. Any reason why that happened?
Yeah, so I think if you look at gross margins in India, if I'm getting numbers right, we dropped by around 50 basis points. That I think was largely to do with the unfavorable category mix, right? We saw a decline of 23% in hair colors, and that's the highest gross margin category for us. Internationally also, there was a little bit of drop in, gross margins. My sense is around 100 to 150, sort of basis points. That was driven by sort of category mix, country mix. However, going ahead, we do expect, at least at this point in time, a benign, sort of commodity, environment. whether it be, kind of palm oil derivatives or whether it be even crude oil. So definitely there would be, more, kind of in the kitty to sort of, drive growth. Of course, alongside being very prudent on, many controllable costs, especially in this uncertain times. So we are not too worried about the commodity, environment, at least in which we are in. And we expect it also to be the same, especially in, kind of medium term.
No, thanks for that. Also, what you're essentially saying is majority of this is just mix and not so much to do with any specific input cost.
Absolutely.
Understand, fair enough. And lastly, just to comment on the dividend, the statement that you make on sort of dividend, skipping the dividend for conserving cash. Anything we need to read into this, or it's just as that statement says that you're maybe seeing or buying potential opportunity?
Yeah, I think there's nothing much to read into it in a way. Right, because this is more of, a timing issue than anything else. At this point in time, the management and the board importantly felt that, let's be conservative. There could be opportunities of growth organically, preserve cash and, kind of deployed basically for growth factors. So for us, it's more of, postponement. As we see also there are, multiple ways of rewarding, investors, which also over a period of time we would be, kind of closely evaluating. So for us at this point in time, at least it's more of a postponement than anything else.
Fair enough. So no cash flow issues in that.
Absolutely not. We have shared the details, in terms of our cash balances as well as other balance sheet metrics. So absolutely no cash flow issues at all.
Fair enough. Thanks a lot for this. Very clear.
Thanks.
Thank you. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi. Good evening, everyone. My first question was on soaps that, the one gap in your portfolio is, the germ protection soap, which is where Lifebuoy and Dettol are the market leaders. So is there a risk that, and are you seeing that play out in the last couple of months, that there is a net shift in the category towards these kind of soaps, and Protect being a very new product in the market, will it be able to take some share here in a very short span of time?
So 2 points here. I think one is if you look at our Synthol portfolio, it's actually always been a germ protection portfolio. We never sort of really called it out front of pack and stuff. We've quickly done that. I don't know if I think the pictures were shared in the presentation. So I think that's one lever. And we do think while Protect is a relatively new brand, Godrej is definitely one of the most powerful brands in soap. So we do see our advantage there. I think we'll see how soaps play out, but we don't feel that we will lose share. And whatever we've been doing, we will continue to do and continue to be agile in our sort of district level marketing initiatives that have played out really well for us. In soaps.
Okay, and my second question was on HI incense sticks. So I think in theory, Vivek touched upon it in his initial comments that these smaller players who rely on indirect distribution may have a problem. So in theory, I think that sounds fine. On the ground, are you seeing actually that HI incense stick availability from these players has dropped in the last couple of months? How is your own supply of your incense sticks which have been launched? How do you see that whole 12-13% of the industry kind of going in this period?
Yeah, so we do see supplies having been affected. And I don't forget these are very illegal outfits also. So this is again legally a good time, even once things settle down, to continue to go after them on that. One interesting trend we've seen is very high sales of fast cut in the last. So obviously that's replacing some of that. Our supply of incense sticks is good. And don't forget, consumers, it's not just incense stick or LV or aerosol. a lot of the usage that's happening is dual usage. So if actually I don't have an incense stick and now I have this very efficacious LV, I'm just going to put it on earlier in the night. I think right now, I think we'll have to almost see what happens on a month-to-month basis. I think the other very powerful thing right now, which we are going to up our messaging and our investment on, which we were already doing, was you don't know what sort of pesticides and stuff you are inhaling in these illegal incense sticks. They're a cocktail of anything. I think consumers again are much more sensitive to that message of what they're using in terms of protecting their health. So I think this is, we're not going to lose this opportunity to push them back. Obviously, the initial signs are good. This is our initial thinking. It's going to sort of depend on how we execute now.
Sir, and my last question is in Africa. So if the revenue declines continue there, is there anything on the cost side you can do to avoid this extremely low level of margin, or is it kind of a derivative that if revenue declines are at this level, margins in Africa for that period of time will remain so low?
Yeah, so I think, hi, this is Samir here. So yeah, there are, controllable costs even in, Africa-US cluster, but the quantum is relatively on the lower side as compared to India and Indonesia, and hence the scale deleverage could have a relatively higher impact on the margin. Having said that, even on a normative basis, Africa's operating profits, have been around 15% thereabouts to the overall GCPL's, kind of consolidated operating, profits, while the revenue contribution is close to around, 23-25%. So it should not move the needle too dramatically, but yeah, I would concur with you that, there will be, margin drop, at least in short term or very near term, because of scale deleverage. It's largely happening because of extended lockdown more than anything else. But as I mentioned, in some parts of African countries, the lockdown is getting relaxed. It's not completely lifted, but it's getting relaxed in a gradual way.
Okay, thanks. That's from my side. All the best.
Thanks.
Thank you. The next question is from the line of Amit Sinha from Macquarie. Please go ahead.
Hi team. Thanks for the opportunity. My question is again on India HI business, and you have touched upon some of these arguments, especially on illegal incense sticks. So just wanted to understand, when you say that the HI this year can be a year of resurgence for the business, is it fair to assume that the decimation of illegal incense stick, at least in the near term, can be the biggest growth driver for the business?
I don't think, it could be a big one if they're not able to resurge and we can push them back. But I think the biggest one is actually going to be demand. See, our focus on health has totally changed, correct? Whether it's washing our hands, being careful, protecting ourselves. One of the worries people are now talking about is that kids are not getting vaccinated because in this situation, no one wants to go to the sort of doctor and things like that. So I think this heightened, I was mentioning about how we're thinking of cockroach marketing differently and stuff. So I think there's this heightened need to protect myself and protect my family. And it's not just on the germ hygiene, but it's on all parts of sort of lifestyle, correct? I think you all have been on other calls where we're seeing immunity products, also, things like Chyawanprash and all growing. So I think you will see a broad-based health trend, correct? And then if you think about something like HI, it very clearly protects you from disease, correct? Obviously, it gives you a good night's sleep, but it also protects you from disease. So I think we're seeing both the demand side and this is an opportunity in this environment to really push back on these illegal incense sticks, and that, if you say our portfolio, our guns are fully loaded up with all the products that we could need. So I think that's, it would be around those three things.
Sure. And is there any market share gain within the organized players also?
Yeah, I think that we voiced over. Look, we focused on volume growth, we focused on market share gain, and I think that will continue. So in soaps, hair color, HI, our March exits were all gain.
Yeah, and the market share gain details, Amit, which we have shared in the presentation, I think it's close to around 90 basis points, is including the illegal incense sticks in the category, right? So it's not just some organized players, but baking in the illegal incense sticks, players in the category, we have been gaining share, not just last quarter, but I think at least over last couple of quarters now. And hence, if we strip out for the moment illegal incense sticks, the share gains even would be much bigger than the 90 basis share gains which you had in the last quarter.
And I just wanted to add one thing because someone might not ask me the question and I'm sort of dying to bloat it out because we've been asked about India and GOM and then, we talk about India and the international business, but our Indonesia business, is coming off a couple of strong years and there again this portfolio is very large HI portfolio, very large sort of wipes portfolio, value for money, air fresheners, again very suited to this environment. And again, it's a highly profitable business. So we feel that business can also, the same health trends that we're seeing in India will really take off. There we launched a full range of hygiene products under the brand Samito, sort of very quickly. So, I think that's, no one's asked it, but I just wanted to put that out there that we see that also, as part of the story of a stronger portfolio at value for money pricing.
Sure. My second question was on the sales versus volume trends. Last year in FY20, the sales growth was significantly behind volume. How should we expect that to play out in the next year and this year?
So look, we had shared this that our desire was to sort of bridge this value volume gap starting Q4 itself, but for the right reasons we actually paused on the second round of price increases in category like soap. However, my sense is for FY21 the value and volume growth would be very close to each other. Maybe on a full year basis, if all goes well, we could even see a little bit of pricing-led growth. But at this point in time for FY21, the value-volume growth should mirror each other.
Sure. And lastly, on the cost management side, so I mean, you were already under basically. If I look at the focus on the cost management and the cost cutting, it was already there in the business since last 2 years. Incrementally, which are the areas you think you can squeeze further savings, especially in India and Indonesia?
I think for us, the focus will be far more on overheads. There are always opportunities to be able to look at, how to better utilize the overheads. I think Amit will be more balanced here. Recognize that this is a need to also invest in, new growth and innovations, and so we would shy away from significant reductions in advertising, but there will be opportunities to optimize advertising spend more. So we'll focus far more on optimizing, improving productivity, reducing unproductivity spends. But I think our EBITDA margins are quite high. The focus still will be again on getting back growth. At the same time, I think it is prudent for us to do what we say is smart cost management.
Yeah, sure. Thanks a lot, team, and all the best.
Thank you.
Thank you. We have the next question from the line of Viren Maheshwari from Jefferies. Please go ahead.
Hi, good evening, everyone. A few questions. First, your presentation talks about new categories and disruptive innovations. If you look at your FY20, you have done quite a bit on new launches across your portfolio. And at this point of time, by all, pretty much most companies are talking about, consolidating, and except for, let's say, hygiene segment. I mean, nobody's talking about launches as much. So why a different, what is giving you the confidence that, it's the right time to launch? Case in point being, for example, your big range, which have just, unveiled. So do you not think it's given that you've already done so much in F20, it just, makes sense to build on that rather than, doing more disruptive innovations and, focusing on new categories?
Yeah, so I think, look, the baby range was being launched anyway. It was already in the CFAs, and we also see e-commerce as a big growth vector. We saw after SARS, what that did to China and Alibaba taking off. So that was something that was already in the pipeline, and, the stock was there. So we decided to sort of go ahead with it. I think, I mentioned earlier on that our guns are sort of loaded when it comes to things like HI and stuff, so we don't necessarily see new launches happening since we've done so many, so we're just going to focus on the current portfolio. I think the new launches will just be across hygiene, so that will be the major focus.
I see. Okay. And sorry for asking you the same question again, but on the April growth number, can you just, because, when we talk to other companies, everybody's talking about April perhaps being the trough, whereas it looks like that, fourth quarter F20 will be the trough for you. And when I look at first quarter FY21, I think most companies will have a trough there. Does it have to do something with the base, because of which the growth is looking, because last year, I think, for the first few months, you have had a bit of challenges. So how do you explain that, given that, there were serious challenges from a manufacturing perspective, or was it that, channel in your inventory at the warehouse level was, or CNF level was higher? I mean, managing that kind of production I'm guessing would be far more difficult, right? So how do you explain that anomaly between you and, almost every of your other competitors?
Vivek, hi, this is Samir here. I think one of the reasons for our growth in April and also to some extent in May, what we were sharing earlier, is household insecticide category. We have seen very, kind of smart growth in household insecticide category over last, sort of 40 days. Yes, we have seen also adverse impact in some of our, other categories, but household insecticide category with close to around 40-45% weightage has more than sort of, offset that impact. So let's see how, the momentum, goes ahead on household insecticide category, and hopefully with, passing time even in this quarter, the non-HI portfolio also should sort of, if not completely come back on track, but be close to,
and Samir, don't forget, we have a big soaps portfolio.
Yeah.
And it's not like our hygiene portfolio. We have hand wash, we have sanitizers, so obviously that's also adding significantly to growth at this time.
Sure. And the other bit is on F21 margins, given the fact that, input prices are down quite a bit, how are you thinking about, let's say, operating margins in F21?
Vivek, hi, this is Samir here again. I think it's too early to call out, right? As to what would be the margins, for, F21. Definitely we would want to, kind of drive growth, but also in parallel be even more judicious as compared to what we have been over past many years on cost, right? We would definitely we want to be ruthless actually on a lot of controllable costs, but also in parallel ensure that cost, which is very important and needed for driving growth, continues, right? And we increase, the productivity over there. We are also in benign commodity environment, right? Whether it be crude or whether it be palm oil derivatives. So let's see, I think, how the margins, kind of shape up during FY21. But at this point in time, we are not too worried about, the margins part of it, because the entire focus is on, kind of driving growth on a full year basis, as well as here and now, coming out of what Vivek shared earlier, the retool, part of the emerge stronger, playbook.
Yeah. And Vivek will have to wait and watch, because, ultimately what we still don't have a good sense of is the increased cost of social distancing, right? What does it mean for productivity in factories? What's the cost of, and this is something that no one actually knows because no one's dealt with this before. But I think there are enough opportunities, as Samir was saying, for us to be ruthless about cost control in the right areas. But the margin situation, I think, will evolve over the next couple of quarters as we understand better what it takes to actually deal with this pandemic in a post-lockdown scenario.
Got it. And the last question, Sameer, is this 400 crore increase in the goodwill, March 19 versus 20, that is just because of currency movement?
Absolutely. Absolutely.
Got it. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Aman Rathi from Morgan Stanley. Please go ahead.
Thank you for the opportunity. I kind of have a similar question. So my first question is basically not only margin, but what is based on the revised business plan that the company would have developed to tackle COVID. What is the growth that the company is targeting in terms of volume or in terms of value for FY21?
Honestly, we don't know. I wish we had a crystal ball gaze to be able to. The situation is so dynamic. The situation is dependent on so many variables. I think what we are focusing on is ensuring we can gain market share. We are working on ensuring that we can provide our consumers with, good innovations and good products. We are ensuring on availability, ensuring that our distribution gets improved. But ultimately, I think the actual growth will depend on so many things beyond our control. The key for us is to actually focus on the leading metrics that will allow us to actually outperform the market. But I think beyond that at this stage, very difficult to give you a specific number as far as the target for the year is concerned.
Okay. So,
yeah, I think we're hopefully conveying our attitude at this time, and in this sort of situation, there's always a choice on attitude. I think our attitude comes a little bit from the portfolio we have. But I must compliment you all. While everything in the world has changed, you guys are still holding on to the same question. So you give us hope that things will maybe remain the same in some ways. Yeah.
So, are you still seeing opportunity for growth given the low sales in April and May, or a flattish demand for the whole year as compared to the previous year?
I think again it's too early to call out at this point in time. Definitely our hope would be, and more than the hope, the initiatives, would be here and now to gain market share, scale up, new categories, capitalize on opportunities in household insecticides, and definitely, build on that platform for rest of the years. But it's too early to call out here.
Yeah, and it's really a situation, guys, where, we could take best guess estimates and stuff, but it is really a situation where I think companies that navigate point to point, and point to point literally means week to week right now to navigate the situation, correct? Because we've not dealt with something this chaotic, both from the supply and the demand side. Right now we're seeing more of the supply side than the demand side, but I really think, it's a week-to-week basis. I think we've given you a broad thinking on portfolio and advantage that we feel that we have, and we're constantly looking for more advantage and to build that out.
Yeah. I think our learning has been here to focus on inputs. Honestly, we don't know what the output will be, but as long as you focus on the right inputs and you can out-execute, that's what we're trying to focus on here, and then let's see what the output is.
Yeah.
Okay. And my second question is related to transportation and logistics. So have you faced any issues or foresee any issues related to transportation of materials to the retailer's point and the rural market?
It is, yeah. We've definitely seen lots of issues, but the issues are getting better by the day. I think we've certainly also seen about a 1% increase in some of our freight expenses over the last couple of months, again, given the shortage in trucks, etc. It is getting better. We're collaborating more with some of our partners to try and see how to, best address this. But yeah, this has definitely been a challenge. But the government issued more clarifications now. But because of also some labor availability on the ground, things are gradually getting back on track. But this is still a challenge.
Okay, so there is still a labor and maybe drivers availability issue as of now on the ground.
Yeah, absolutely. I think that it's taking some time for things to get back to normal.
Okay. Thanks a lot.
Thank you so much.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. First question on Africa. In the Africa cluster, growth has slowed down for the last few quarters and not just this quarter. Can you share the top 2-3 problems which you are facing in the Africa cluster, and how do you see the Africa opportunity going forward, considering that some of the markets are commodity driven and they might face some structural weakness?
Yeah, I think clearly the biggest challenge has been macroeconomic, but we don't want to externalize that. But clearly, if you look at the growth rates have been a significant challenge across all of Africa. And when we compare our market shares in the categories that we are in, I think we've been doing reasonably well. Our innovations are working, but certainly we've seen a huge amount of macroeconomic volatility. The second piece, I think, is on the scale-up of our wet portfolio. I think the scale-up of our wet portfolio has gone slower than expected. We still believe that there is a tremendous potential in that business, but the second big reason for our shortfall actually has been the scale-up of the wet hair business. I think having said that, we have new leadership in place. We still remain extremely excited about the long-term potential of Africa. As Sameer was mentioning, I think this year could be challenging, at least in the first couple of quarters, given that COVID hit Africa a little bit later, and most countries are still in some stages of a lockdown. And also given the nature of the category and dependence on salon, it will certainly go through its sets of challenges. But I think this is also a good opportunity with a new leader to be able to better diagnose where the issues are, really figure out how to drive our go-to-market in a very different manner altogether, and also see if we can pivot our portfolio to do it, yourself products, etc. So we still feel confident about the Africa potential, but recognize that over the near term, we could still see some challenges there.
Yeah. Would it be fair to say that you are more excited about India compared to Africa? Not only, say, in the immediate, but even in the medium term, the Africa opportunity seems to have weakened compared to what you had thought 2 years ago.
You're asking us to choose which child we love more, right? So as parents, honestly, it's very difficult to say that we prefer. Each country has, different stages of evolution, different growth dynamics, and different stages of growth. I think Africa is clearly a longer-term bet. India is a much bigger business for us, so it's our oldest child. But certainly, I think Africa needs an equal amount of love and attention.
Yeah, I can jump in here. I think we love all our businesses passionately, but we can still look at them with critical eyes. I think the idea that we got Dharnesh on board for Africa, he is an extremely senior leader. I can tell you we hustled a lot to pull that one off. And I think the idea is that Africa is, we're doing the same things in Africa, slightly different categories, which is probably why we've had some of the problems we've had in the past. But this value for money, well distributed, well grounded, low cost manufacturing, I think the long term play is there. And look, the African continent, these countries are not easy to do business in, correct? So you need resiliency. I'm not taking any way, there's no long term without a short term also, but we are fully committed to getting it right. And then I think there are lots of advantages to have on the continent.
Sure, best wishes for that. Second question on HI. How is the mix of sales between Gold Flash and Active Plus now? Is it mostly the new product selling now, or the old one also is doing good numbers? And the part of the overall base, how large will Gold Flash be now?
I don't think we can give those numbers out to you exactly, but as you know, we've stopped feeding in Active Plus machines. Obviously, we're still supplying the refills. So all the new machines that are going in are sort of Gold Flash machines. So it's literally, we are just fully upgrading the consumer to the better technology. But if they have old machines, we're obviously supplying those refills to them.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. Just had two short questions. One was on the India business. So if you just tell me as of date, how much of our distribution has been reactivated? You spoke about manufacturing capacity utilization. So could you give a similar color on distribution as well?
So about almost 80% of our distributors are up and running, Harit. But the challenge still is actually them visiting the markets. So a lot of them are still doing counter sales, doing tele-ordering. We have put in applications and ordering applications for them to work on the phone. So the number of actually people visiting the market are still on the lower side, but we do expect that to keep on improving as time goes on. But by and large, all our CFAs and almost all our distributors are actually now operational.
Yeah, one of the interesting